this is Adil from BSA. Regarding BSA, BSA is a firm that's providing accounting and consulting services for over a period of over 20 years in UAE and has been dealing with variety of services including tax, accounting, compliance, and VAT services. So we have been also giving different trainings and webinars for our clients and for other stakeholders to have grasp on the things that are emerging in the market so that everyone is aware of the updates and they could tackle their respective operational business issues. Today, we have picked up the topic of finance reimagined, where we will be talking about how the finance has evolved over the past couple of years and how finance professionals need to be aware of the things and the updates that they need to be abreast with in order to tackle the challenges in the emerging market. So today we have with us Mr. Shahid Ilyas, who will be giving a short presentation on this topic and will be with us for next 30 minutes. So Mr. Shahid, you can take it up from here and you can start your presentation, please.
Thank you very much, Adil. Assalamu alaikum. Good morning and good afternoon, wherever you are in different parts of the world. So, a warm welcome to the transformative webinar series on the emerging finance challenges and solutions. I'm Shahid Ilyas, a senior finance professional with over 22 years of industry experience. And joining me later in this series, my colleague, Mr. Yasir Kimani, who is also a senior finance professional with 20 years of experience. So let me give you a first brief introduction of this topic, and then we'll go on with the presentation, a small presentation. So finance function acts as a custodian of data and serve as a central point of communication and coordination between within the departments in the organization. It plays a key role in driving the organizational success. So I was talking about that the finance function acts as a custodian of data and serve as a central point of communication and coordination between the departments in the organization. So it plays a key role in driving the organizational success. So, however, as the industry evolves and technology advances, the new challenges emerge. The new challenges demand a re-evaluation of the financial best practices. The finance function, the emerging finance function faces lots of challenges, ranging from the rapidly evolving business landscape to the transformative impact of the technology on the financial processes. So to navigate this complex terrain, the organizations must adopt the innovative solutions that not only caters the current obstacles, but also positions the organization for the future success. In this context, the discussion in this webinar series will focus on the challenges faced by the emerging finance function and the solutions, the strategic solutions. So over the next 4 weeks, exactly on Thursday at this time, we'll embark on the journey through some compelling topics. Today, we'll delve into the future requirements of the finance role. Then in the next week, we'll navigate the intricate landscape of the digital transformation and the role of finance, which is very important. Then in the third week, we'll unravel the strategies for achieving personal transformation to enhance the professional effectiveness. Then concluding the webinar series in the fourth week, we'll explore the contemporary phenomenon of the ESG, delving into its fundamentals, the reporting requirements, and much more. So thank you very much for joining in this insightful exploration of the evolving facets of finance. So I have a brief presentation on my hand, so let's quickly go through it. Let me just share my screen first. Okay, I'm sure people can see my screen. So this is the agenda, which I've recently just explained. There will be 4 sessions in total. The first session will be talking about the future role of finance experts. Then in the second week, we'll be talking about the digital transformation and the role of finance. And in the third week, it will be personal transformation, because the finance professional, normally they are very good at the technical skills, but most of the times they feel short of the skills that relates to the personal transformation and personal effectiveness. Then in the fourth week, the emerging topic, which is a very relevant topic to today's finance world and the emerging market, is the ESG. So in the fourth week, Mr. Yasir, my colleague, will share his insights on the ESG topic. All right, so let's jump into the future finance requirements and the roles. So let me tell you my little background, that I have worked in a Fortune 500 company. And at the moment, I'm doing my consultancy in Pakistan. So I can see the difference between the emerging or the evolving functions, the finance function which is adding value, which is creating value. And in some organizations, the finance is not adding value. So finance is just restricted to the traditional role, the transactional role, let's say. So I have seen both of these worlds. So maybe perhaps you would be listening some of the very important points from the horse's mouth. All right, so let's first dig into the why is there a need to shape the future roles of finance experts. So this is very important to understand. So there are many factors, many factors, but we can conclude all those factors into three major categories. So the first category is the rapidly evolving business landscape. All right, so the rapidly with rapidly evolving business landscape, we mean the changes in the customer behavior, consumer behavior, the changes in the markets, and the changes in the supply chain, the changes in the business models, etc. All these changes happening in the business world, the business is continuously evolving. The finance professionals cannot restrict themselves to just the transactional roles. For example, the bookkeeping, the accounting, the financial statement preparation, the reporting of the financial information, the tax, and the compliance. So these are the transactional roles. These are not value-adding roles. So finance cannot restrict themselves to just these roles. They need to come out. They need to work with the business teams shoulder to shoulder, and they need to work and work together. They need to collaborate with the business teams and take part in formulating a strategic business perspective. So they need to actually contribute in strategy building, let's say, formulating their strategy. So evolving businesses, really the finance professionals need to create value by putting their selves, they have the valuable information with them, so they can really share their valuable insights with the finance different other teams. So by doing that, they would be really supporting the other teams to calculate the different financial impacts of the different strategic options, because the strategy is always reflected in numbers. So every strategic option can be calculated, can be translated into calculations, and the finance can really explain the business teams that which strategic options is really maximizing the return for the organization. So this is really important. So the next broad category is the technology disruption. So as the technology advances, changes how the business operates. For instance, the use of the effective information system, I mean the ERP, the automated business process instead of the manual business processes, the adoption of the business intelligence softwares like BI, the tech-savvy finance professionals, the inclusion of the tech-savvy finance professionals in the finance teams. So with all these, finance can ensure having a good data available with them. So once they have the good data available with them, they can really analyze the data. They can put different analysis tools to analyze the data. Now they can, if they have the analysis, they can even have predictive analysis on hand. So with all these valuable insights, they can really support the organization in translating the different strategic options into numbers, and then the best option can be worked out and different strategies can be formulated. So and you can imagine that in the absence of this finance support, the organization would just be discussing their strategies. So it won't be that meaningful. So with the support of the finance, just imagine if there are certain strategic options and finance can create financial models for all those strategic options, and the finance models can definitely explain which strategic option is yielding the most benefit for the organization. So here, let me tell you the example of the budgeting process. Let's say budgeting is the simplest example of the collaboration between the finance and the organization, because budgeting is, you can explain budgeting is in a way that it is the reflection of the strategic objective of the organization. For instance, if the organization decides to decides to grow the organization in the next year by 30%. Let's say they want sales growth of 30% in the next year, and they want to optimize their cost by 10% in the next year. So having this strategy and translated this strategy into numbers, the budgeting process would explain this strategy. So, and budgeting cannot be done in isolation by the finance department. So finance has to collaborate with every stakeholder, every department, every function in the organization to create an effective budgeting. So if the budget can be collaborated with the organization, and if the budget can be prepared with regard to the strategy, it can definitely pave the path for the organization to execute that strategy later on in the financial year. So this is the simplest example of collaboration of finance department with the organization. But let me tell you that, as I told you, that I've worked in the company where the finance function used to create value, and they were working beyond their transactional roles. And I've seen in my consultancy that there are organizations where finance is just restricted to their transactional roles, where there is no value creation by the finance department. So I can tell you that in the most of the organization, because I have worked most of the times in Pakistan, so I can tell you about the Pakistan industry. So I'm not sure about the UAE, but in Pakistan, I mean, many companies, the phenomena is that most of the companies, the finance function is not creating value for the organization. They have just restricted to the compliance, accounting, and financial statement preparation and reporting. And even in some of the organizations, the finance is even not allowed to prepare the complete financial statements because of the confidentiality issues. And these phenomena happens in the entrepreneurial companies, the family-oriented businesses. Even they don't allow the finance department to prepare financial information, because once they have the financial information, the exact picture of the business would be visible. So these sort of things happen in the real world. So only the multinational companies, or the, let's say, the top companies, emerging companies, in those companies, the finance function is really creating value by going beyond their transactional roles and working with the business teams. Okay, now the third broad category is the economic uncertainty. So economic uncertainty can take different shape. For instance, geopolitical changes, the unforeseen disruptions like COVID-19, regional wars like Ukraine and Russia, and the Gaza and Israel, they can escalate anytime. The inflation, interest rate hikes, and inflation, which is the global phenomenon now, the globalization. So all these issues pertain to the economic uncertainty. So finance professionals can play a really pivotal role in strategic risk management and prioritizing the investment and fund management. So they can direct the funds to the initiatives that can yield the maximum benefits for the organization. And also they can rationalize and optimize the range of products and services. So inclusion of finance, because finance has the visibility for finance function, has the valuable insights, visibility into the information of the business. So their inclusion, their participation, their contribution in the strategy building, strategy formulation would definitely yield lots of value creating results for the organization. All right, so let's just conclude in this slide. You can see that the difference between the traditional and the evolving finance. So the traditional finance focus on the transactional, as we said, the transactional and compliance. So they do the financial statement reporting, they just file the taxes and statutory compliance, whereas the evolving finance is the value driven, and they create value, they work together and create value. So as far as the collaboration is concerned, the traditional finance, they work in the silos, and even I have seen many finance functions that in some of the organizations, the individuals, the professionals, the employees of the finance function were not allowed even to mingle and chit chat with the other business teams. I mean, this is the one extreme, you can say. So whereas the evolving finance, they collaborate. So they collaborate with the other business teams effectively and actively. And that's, I think, the only way the organization can make the most of the finance function, and they can really they can productively create their strategy and formulate their strategy with the inclusion of finance. And that is why perhaps this collaboration factor, if I'm sure you have seen in the last 10 years, this business partnering concept. Finance business partner is exactly on the same lines and the same concept, that the finance functions is no more just a control department, a control of the cost and the formulation and the compilation of the data. So they are no more that sort of a function. So they are actually a partner for the business. So they are working shoulder to shoulder with the organization in capacity building, in formulating strategy, and they are actually the partners in achieving the overall strategic goals. Okay, now the technology integration, as we spoke about, the traditional finance, the traditional finance teams, they are not tech savvy, and they because they have their limited task of just the accounting, bookkeeping, compliance, so they don't need technology to be adopted. But in the evolving finance, it has to adopt the technology, the emerging technology. And by the way, there are lots of other technologies that are keep on coming in. For example, the blockchain. The blockchain is the new technology which organizations are now adopting. I've seen that the real estate is now quite some real estate big organization have adopted blockchain technology to formulate their financial statements. So the fourth is the perception in the organization. So the traditional finance is considered as the support function, right? They are considered as the non-productive department. And by the way, as I told you that I've worked in a Fortune 500 company. Even in that company, the cost of the finance used to be clubbed as a non-productive cost. So finance in general, you can say that the cost of the finance function is considered as a non-productive. So finance is part of the non-productive. So that is why I'm saying that it is a high time that the finance should prove itself that it is no more unproductive. It is a productive. It's part of the producing department. It's part of the productive aspect of the business. So in the evolving finance, as we just discussed, that the finance really doesn't operate as a support function, but they are standing right shoulder to shoulder with the business teams as a productive department. So they are a big support to the producing teams, or productive departments, let's say. So the next is the decision making. Traditional finance, they are not part of the decision making infrastructure of the organization. So they are in their silos. They are just making the financial information and reporting it. That's it. But the evolving finance, they are part of the decision making drive. They are part of the decision making process because they have the valuable information, because they have the valuable insights, so they can share and really contribute in formulating the strategy and then in achieving the strategic objectives, the overall goals of the organization. Then the risk approach, of course, there is no risk management in the traditional finance, restricted to just the transactional tasks, whereas evolving finance, they are proactive and they do the strategic risk management, proactively anticipating what is going to happen. So they can create different models, they can create different financials, and in advance they can contribute in the form of telling the management of the company and the teams of the company organization that this is the picture that we are going to have in the couple of months. I mean, in the next quarter, let's say, and in the end of the financial year, so they can anticipate this information, and on their anticipation, really, the organization can take appropriate actions and they can readjust their course. Okay, now this is very, very interesting slide. The source of this slide and information is basically the KPMG. So KPMG conducted a survey, the top organizations in the US. And this is a very, very interesting. Let me explain you. So if you see this 25%, let me first tell you this. See this 5%. And exactly this is 40%. So what is this? This 40% is the business partnering. So in the traditional finance, the business partnering is very, very limited because as we spoke, they are limited to their silos. So they are not really contributing in the organizational strategy building and achieving a strategic object. But now in the evolving finance in the future, it has to be 40% because it clearly, it clearly shows us that the future role of finance demands a partnering role. It doesn't demand the transactional role restricted to just the financial information preparation. But because of the modern tools, the preparation of the financial information is no more a concern or a hassle. There are so many tools available, and with the RPA, the robotics process automation, finance function can achieve this preparation of financial information objective very easily. So if that can happen, then finance can really go beyond this transactional role and can really participate with the business teams in the organizational strategy building. Then again, a very, very important, this 40%, if you see this 40% is the transactional processing. So 40% in the traditional is the 40% is the transactional processing, whereas if you see this in the evolving, it is just the 10%. And how can this transition happen? Is just because of the adoption of the technology. Because if the traditional finance function, the people are less tech savvy, they adopt less advanced technology. So they are all the time working with manual processes, manual information processing. But in the evolving finance function, they are using the state-of-the-art technology and tools and the automated business processes, RPAs. So they can really generate automated financial information. So they tend to have less transactional processing. And the transactional processes is converted actually into the business partnering. So this is very clearly, we can see the transition between the traditional and evolving. So another important aspect in this slide is this 10%. So 10%, you can see this is the specialized COEs. The specialized COEs you can see is the digital transformation, data and analysis. So this is obviously missing in the traditional, but in the evolving, this adoption of the digital transformation, which we will cover in the next webinar. Digital transformation, data analysis. So data is the new oil, data is the new gold for the organization in future. Okay, so how can finance pave a forward-thinking path that maximize benefits for the entire enterprise? In a nutshell, let's conclude today's session that the role of finance in creating value. How can finance create value? So there are a couple of examples here. A strategic partner and a key advisor, because finance has insights, so they can have recommendations, they can share valuable information with the business teams that contribute to informed decision making at the strategic level. All right, so the next is the value integrator across functions, because finance, as we have spoken, that the finance acts as a bridge across the different functions within the organization. So this ensures that the financial goals are aligned with the support and the overall goals of the organization. Then the performance management and the monitoring, because the finance is instrumental in setting the performance matrices, and they are the custodian of the financial information. So they all the time tracking financial information, identifying areas for the improvement, and ensuring there's the alignment with the financial strategic annual objectives. Then the optimized fund allocation. This is very important because finance has the tracking, finance has the valuable information, so they can direct the resources towards the initiatives that maximize the yield for the organization. Now, the top line growth, as we have spoken about, that the finance can definitely contribute by sharing the valuable information, like as we spoke about, that the predictive analysis, if finance function, evolving finance function has the data available with them, so they can employ analysis, they can even employ predictive analysis, so they can really share that valuable information with the business teams, and different strategic option can be worked out. And with the help of the finance function, the new markets, the new products can be explored, and ultimately the organization can explore the alternatives to achieve the top line growth. And by the way, those who are not familiar with the top line growth, meaning the revenue growth, and that is the perhaps the most important aspects of the any company. And I can tell you that even in the budgeting process, the most thought out item of the whole budgeting process is the top line, because everything is driven by the top line revenue. And lastly is the operational excellence. Finance supports the operational excellence by implementing sound financial management practices. So optimization of the business processes, optimization of the different cost saving opportunities. So by doing all these initiatives, finance can really contribute in creating the operational excellence for the organization. So this is it for the today's session. And I'm sure this brief session would have really opened up your mind about creating the value that finance can in the organizations comparing to the traditional roles. And I would really encourage you. I'm sure the people listening here in the webinar, they are professionals in the different stages of their career. So I would really motivate you to go beyond your transactional roles, contribute in the strategic decision making, and be the change agents. Take the initiatives, for example, the cost optimization initiatives, because organizations are really facing supply chain challenges these days, and the different challenges like the changing business models. So all the businesses are in pressure because of the global inflation as well. So if finance function can, finance professional, finance experts can take the lead and take initiatives, they can really help organization steer from these challenging tasks. So that's it from my side for this session today. So let's join next week. We'll be discussing about the digital transformation and the role of finance. That is, again, a very, very important topic, because that is the talk of the town at the moment. The evolving finance function cannot survive without adopting the digital transformation.